cool thing about physics and kind of my research that you can apply it to anything. Options pricing models are based in a physical model. The price is very random. Again, my own research, I was dealing with molecules inside of cells. The way that they move around in a cell is actually almost identical from a math perspective to how a price moves in a sea of trader that buy and sell. So it's a formalism, again, stochastic calculus, but you can apply it to cells, molecules, price. And in that way, I was able to say, okay, Uniswap v3 is like an option when you provide liquidity. If you apply the math of physics and the models to this, then you can get a little bit more understanding of it.
Welcome to the ATX DAO podcast, the hub for exploring the forefront of blockchain technology and Austin's Web3 community. Your hosts, Nick, Mason, Luke, and Ash, connect you with innovators within ATX DAO and beyond as we venture into the world of decentralized technology. So crack open a beer and join us for a front row seat to learn about the innovations and trends shaping our digital future. This is the ATX DAO podcast.
We just wanted to say thank you very much for coming on here. I know it was really run and gun, but it was fantastic. And, as we were just talking earlier before the pod, I had a chance to bump into Guillaume at Panoptic's RWA Day, which was a fantastic event at ETH Denver. Lots of super cool people on the panel, lots of super people, cool people in the audience. We all had a chance to chat. It was so much fun. And a special shout out to Rosalie from Panoptic and Richard from ATX DAO for making this happen. If not, we wouldn't have this opportunity for our paths to have this new intersectional thought vector to be formed, right? So it's really, really cool. Just wanted to say it's great to have you on here. For those of you who don't know, Guillaume is the mad genius founder behind Panoptic, right? I guess let's just start it up right now. Nick, do you want to start QBing this, bro?
Yeah, definitely. So again, Guillaume, thanks for hanging out with us. I guess maybe for listeners that haven't heard of Panoptic, or just hearing about you now, give us the quick pitch. What is Panoptic about?
Yeah, of course. So yeah, thanks, Ash. Thanks, Luke, for the invitation. Yeah, so Panoptic is an options protocol on Ethereum. So options are kind of huge in TradFi. Institutions, degens, buy and sell options. This is kind of a necessary instrument in finance. You need options in a way that that fills a role that futures don't fill, that stocks, that fixed yield doesn't fill. So it's one of the pillars, I guess, of modern finance. And a lot of folks want to see options as well for digital assets. And this is what we offer. But then by doing this, we are reimagining options a little bit so that they work better on the blockchain. So we don't try to copy paste the TradFi model, but rather create something new. So this is similar to an AMM like Uniswap. You can trade, you can spot trade, but it's a different set of actions that happen in the background. You can trade on Coinbase, on Uniswap, you get the tokens, you don't care. But at the end, it's two totally different ways of exchanging tokens. So in the case of Panoptic, it's also a totally different way. The front of the user interface looks very much like what we expect from a TradFi options, but there's a few quirks, and that means that it works better in terms of integration and kind of scalability within the blockchain world. And it's kind of a new innovative way, again, looking at options. The same way AMM transforms spot. We also think Panoptic, and we're creating perpetual options, but our perpetual options will also kind of revolutionize how options are done in the future as well.
Okay, I want to come back and dig in on some of that. But before we go there, I think it's always interesting with our guests. We get a wide variety of people on the show. And so curious about, what led you to Panoptic? What was your journey there? And what was that inflection point, that aha moment that led you to build this?
Yeah. So again, I have a pretty unique background, I guess, like most people in crypto, but I was in academia. I did my undergrad, PhD, postdocs, multiple postdocs. Eventually, I was an assistant professor of applied physics at Cornell University. So very, very kind of successful path. And I was doing research in biophysics. So looking at cells, microscopes, not at all related to finance, not at all related to DeFi, but I was always kind of at the forefront of research, technology, wanted the best camera in my lab, wanted the best instruments, the best equipment that I could get on. So I was always kind of at the forefront. So blockchain went on my radar. 2017 with CryptoKitties. That I knew about Bitcoin, but Ethereum made it very, very clear in my head. This was maybe the future of everything, computation, finance. So again, as a hobbyist, I was big into DeFi. My day job was research, but then I was doing CryptoKitties, MakerDAO, Uniswap V1 and V2. I was an LP quite a bit, and turns out that when V3 kind of was released, I was eager to try the concentrated liquidity aspect of it. So it's a slightly more complex operation. You have to choose a range for your price, but once you do this, you're in range, you make money. If you're out of range, you make money. So that seemed pretty interesting to me. I tried it out. After a while, I think it was probably like Uni ETH as the pair. I went down and sat down and looked, did I make money or not? You have fees. It's actually quite hard to know exactly how much you made, but I sat down and I lost net money without necessarily understanding why. So maybe a lot of your audience members also went through the same process. You had liquidity mining, DeFi summer. It was very easy to provide liquidity. You got a lot of tokens as well, so that made it easy. Uni V3 is a lot more complex. And again, sitting down, you may find out that what looked like a good trade ended up being net loss. So that was bugging me a little bit. Again, Uniswap V3 came out in 2021. So that summer, I guess, as a summer project almost, I was still a professor at Cornell, but decided to go through what is Uniswap? What is the math behind Uniswap? How can I understand this better from a more systematic point of view? So as a physicist, I use the tools in my arsenal. And it turns out that when you go through that process, I kind of discovered that providing liquidity in Uniswap V3 looks a lot like selling an option. And selling an option is actually pretty risky. It's like 400 level class in terms of investment. Buying GameStop is one way. Buying calls on GameStop is maybe more complex. Selling calls on GameStop, this is almost financial suicide. It's actually very tough to do. And this is what people are doing, LPing in Uniswap. V2 made it simpler, but it's still the same exposure. V3 made it kind of more dangerous. So cool thing about physics and kind of my research that you can apply it to anything. And a lot of physicists have been successful in the past applying the models and the math from physics to finance. Options pricing models are based in a physical model. The price is very random. Again, my own research, I was dealing with molecules inside of cells. The way that they move around in a cell is actually almost identical from a math perspective to how a price moves in the sea of trader at buy and sell. So it's a formalism, again, stochastic calculus, but you can apply it to cells, molecules, price. And in that way, I was able to say, okay, Uniswap V3 is like an option when you provide liquidity. If you apply the math of physics and the models to this, then you can get a little bit more understanding of it. So I could derive like the probability of profit, the way that you could derive an implied volatility, a real volatility. So a lot of this was discovery in real time while I was publishing my results. And this is all throughout the first half of 2021. Eventually, this came up to be very successful on my side. I used these strategies to be an LP in Uniswap V3. It changed. I was profitable again, if you want. And at the end of the day, I was at the point in my career in academia, whether I was going to apply for tenure, try to do the tenure track position, get jump stability for life. And it didn't excite me at all, actually. Being in the same place, you have some freedom. You're going to get fired, but you still have a framework to work with. So I felt like pushing this DeFi research forward is exciting, more at the forefront, something that, again, could have an impact, again, in finance, but also more broadly to whoever uses that. So I decided to do the shift, jump out of academia and then jump into the startup world with both feet. So we did a couple of seed round fundraisers. And at the end of the day, I'm doing it full time. I'm again managing a team, and then we're launching in May. So after 2 years of research, discovery, building, again, I'm managing my team the same way I manage my research lab, so it works well at this size. But at the end of the day, it's very, very organic. I'm still kind of in my element, so that's kind of where we are now.
That's fascinating. I want to, sorry, Ash, I want to dig into two things real quick. So one, going back to CryptoKitties, I think that was an inflection point for a lot of people, but I think it was just like, it was new, it was interesting, it was fun. What about the underlying technology with Ethereum and blockchain drew you in? Like, did you immediately see opportunity in something broken in the world that you thought this is a path forward, or was it just more of the innovative side of things?
Yeah, the innovation, the excitement. I mean, CryptoKitties was kind of interesting. You could breed them. You could actually create. So I had like multiple generations of, you can like rent, sire some kitties. You can buy someone else.
Right.
See what I created the ugliest CryptoKitty I could think of. And actually, I'm really proud of it. It took like many generations, but I got something pretty ugly. You could actually, if you can share it as well, you can show it. But that is magical almost. You interact. It's real money that you get, right? Okay, what do you do with it? Now you trade. You do some weird operations, transactions. It creates something new. CryptoKitties was a magical moment. First time on Uniswap is also a magical moment. You have 2 tokens.
Yeah.
You want to swap. No limit order. No nothing. It's very straightforward. So CryptoKitties, Uniswap. Uniswap V3 was also one of those magical moments, but it took some work to get it there. But it's just the excitement, the opportunity, the innovation that drew me to it.
Yeah, absolutely. So you actually jumped over, nice segue to the next question I had, which was, you talked about the discovery process with Uniswap V3 and your process of kind of reverse engineering that. And obviously with your mathematical prowess, the math side isn't the issue, but I'm curious about your process there. Was it literally just looking at the contracts and then reverse engineering transactions, or what was the approach to discovery?
Yeah, so the first time I sat down and did the math, I started with that amount of token. Price did this, now I have this amount of token. So you have to fill the gaps if you want. That meant having to read the white paper. I didn't go to the smart contracts yet, but eventually this is where you have to go. But it's just as simple as saying, okay, what am I getting into? And if the price goes up by 1%, or if it goes down by 1%, how does that change the composition? So Uniswap white paper has a lot of these details. You can plot it on the chart. You see it as well. The payoff of an option is very clear when you plot the actual composition. You have X amount of USDC, X amount of ETH. Now you plot this against the price. Again, you 100% ETH on one side, you 100% USDC or cash on the other side. It's very like broken flat here. And those that know about options, this looks like a covered call payoff or setting a put option. So just working that through that, making sure I could see the same way that, again, in my research, you have some results. You look at it in 25 different ways. There's one way that pushes you forward and can iterate from that. So the articles were initially, oh, look at this. This looks like an option, but eventually you can dig deeper by starting from that Uniswap kind of kernel of an idea of, okay, this is what it looks like. It's fascinating. And my first article was like Uniswap V3 position as perpetual option. So very initially, I identified this as kind of a very cool thing. And that was kind of June 2021. Yet it took a while, but it was always clear to me that Uniswap, in some magical way, links spot traders and options market makers. And typically it's in, you trade on NASDAQ in New York. You spot trade there. You have options in Chicago. It used to be that there was a optical fiber that would be routed between the two cities, and then depending on the weather, the path, it could delay by a few microseconds. That meant that the firms had slightly different prices. Now it's actually the same contract, the same physical place. You trade on Uniswap, it affects the options market instantaneously, and that's not something you can do in TradFi. That's not something that people have looked at because, again, AMMs and the innovation of the blockchain did not allow it in the traditional finance world. But now it's actually possible. So yeah, it's again, cool discovery, and you can do a lot more than just options as well. But yeah, the innovative nature of AMMs and exchange it on the blockchain means that you can actually reinvent pretty much the whole financial system in a way that is totally different, but works better in most ways.
Yeah, I mean, it's very hard to put in a T1 line, right? Like that T1 line to ensure that basically you're getting like the best data feed is like insanely expensive. I know because I just jokingly asked a buddy of mine. I was like, bro, how do I get the edge? And he's like, do you have like 500K laying around that you just want to install this fucking thing into your house? And I'm like, Probably not. So yeah, that doesn't make any sense. But yeah, I mean, like it's a real breakthrough that what you guys did. I just want to have I want to do a sequitur here. Right. I just wanted to ask, like, I heard that you grew up on a farm. Is that true?
That is correct. Yeah, dairy farm.
And did you grow up in a dairy? You're obviously not French Canadian. You are French. The
No, I'm
truest
French
French.
Canadian. So I live in Boston now. Live close to Quebec
Okay.
City. My
right.
father, grandfather, back generations, all farmers. I have three
Oh.
older brothers, and the eldest took over the farm. And again, it was my dad and his four sons. Now it's my brother, but it's like 10 times bigger, a lot more like technology wise. In a weird way, I'm very close to my older brother who runs a farm, but he's always at the edge as well, getting the latest equipment, new way of doing things. So I'm applying it to finance, but he's doing it also very well at the dairy level and how we get more milk out of your cows.
Innovation is a family affair.
Maybe so, yeah.
Yeah.
I ask because it's like one of the weird things is like, you know, we're all in Texas, right? In Austin, right? Like, and forward contracts on cattle is a thing. And I just didn't know if like this is one of those things where you're like, hey, you're thinking about doing perpetual options, right? Which, you know, I heard about it through this, what do you call it? This never ending options paper, right? With Dave White,
Dave White?
SBF. Yeah.
Who's
super
FBS?
cool.
Who's SBF again? Oh, no.
Yeah, I don't know, but I think he's joining. I think he's the newest gang member at the Penitentiary somewhere. You know,
Yes,
he's their
okay.
chief accountant there, I'd imagine, right? But like, so it's brilliant. But I was just curious to see, have you ever thought about these correlations of like, you know, being like, hey, we can leverage this thing that's a better mechanics, like you said, because it's like Oracle free, you know, it has real time kind of like adoption to be like, oh, we could put something like cattle options like on there theoretically. Is this like a wild idea?
Yeah, I mean, the futures markets were for agricultural products, people shouting in a pit saying, I want to buy, I want to sell. Chaos, but it worked. People were able to trade, and this happened for like a century almost. Now it's all electronic. It's nerds in front of a computer, but in some extent the farmers or whoever uses those systems are very, again, technology leaning into any new way of trading, and this is my view as well. Internet is a transitionary period between people shouting in a pit and blockchain, certainty, security. As you say, it's a perpetual market, 24/7, but also it adds a different layer of trading. You don't have expiries. You can actually be a bit closer to the pricing because in the case of Panoptic, it's Uniswap based. So all of it means that maybe in the future, commodities and commodity traders, they won't care about where it's settled. Is it Ethereum, layer 2s, could be Solana or whatever, but they would get exposure to that product in a way that's unique and different. Same way that internet changed the open outcry model, blockchain world, and DEXs could change also how the countries are made. And we are pretty much agnostic. We're launching on any chain. We can offer it on any tokens. Could be Pepe, could be Pepe with hat. Any type of token, we can create options and futures and perp-like products on top. And that's because we from the beginning made it so that it's as composable, as open as possible. Could be cattle, contracts, could be oil, could be huge trade, could be an NFT. We don't care as long as it's a tokenized asset we can do. And that's why we invited you to the RWA. We feel like RWAs, if you want to commoditize or tokenize any commodities, you need a place to exchange them. You don't want to do it maybe on a order book based model because it's on Ethereum. You'll do it on Uniswap. Then you have this cool ability of making options fall out naturally. You have tokenized assets that trade, then you can have options on tokenized assets without any effort by kind of using Panoptic.
It would be wild just to see, as a herald back to your childhood days and your farm days, like to see if dairies, futures, and options effectively are traded on Panoptic, right? I know CME basically does have it on there. So it would just be crazy to think that this is one of those assets that like goes back to like do a full loop to their childhood, right?
Exactly. And for some, also as an aside, so you can trade any type of futures, commodities, could be oil, wheat, corn as well. Turns out I'm from Canada, Quebec City. It's cold up there. But for the past 15 years, getting warmer, you can grow corn in Canada, which was impossible. It's like crop from Mexico. They, of course, improved the growing season, but you can do it now. And my brother trades corn. He could also trade those corn futures. But yes, really, outside world, global warming made it so that you can also trade those corn futures in Canada, which was impossible to do 15 years ago.
Yeah, it
So
really is a wild time.
Speaking of kind of engaging with Panoptic from all different walks of life and all different kinds of users, who do you have in mind? Who's your target user for Panoptic first? And then I want to follow that with kind of, who you're catering towards.
Yeah. So the easy way or easy answer is anyone that is providing liquidity in Uniswap V3 currently. Could be any token, could be BTC ETH. They are option sellers, whether they understand kind of that risk profile or not. So to some extent, they would be better served through Panoptic because it's the same risk profile. You provide liquidity, you sell an option, you get the same exact payoff. It ends up in the Uniswap pool as well. So it's just a different front end to some extent. But the key thing is that if you're selling on Panoptic, you get the same returns as on Uniswap V3, which is fine. But if someone buys the option from you, you sell, it's available to buy, someone buys part of it, all of it, you get more returns. There's a spread term that the buyer will pay you. So you have strictly better returns because now buyers can actually say, no, you think the price is going to go down. I think it's going to go up. Let me take the other side of that transaction. So LPs in general, and they get a bad rap. They always, the narrative on crypto Twitter is that UniV3 LPs lose millions of dollars. You're stupid to even try it. It's a losing game, but it's because there's no other side of the market. If to some extent someone is losing money, you should be able to take the other side and make money taking the exact opposite trade. So that's impossible to do in Panoptic in Uniswap now. It's what Panoptic enables as well. So LPs, better risk profile, better risk management, and also higher returns.
And prior to working in DeFi, did you come from I know you did your work in academia, but were you trading then as well? I mean, you seem very well versed. So I'm just curious what that side of your background looks like.
Yeah, so I'm in TradFi. I have my trading account that I'm trading options exclusively. I never trade or buy any stocks. It's very boring. Buy and hold, sell and trade. There's not much more to it. Options allow you a lot of diversity. Again, coming in from my background, you can understand the math and the probabilities behind it, but it's a different way. And most of the time, I think a stock will go up, it's going to go down, lose money anyways. So you could actually have structured strategies with options that say if it's range bound, you make money, or if it's outside of that range, you make money. You can actually be somewhat neutral, somewhat weakly bearish in a way that you can get a paycheck at the end of the day by doing this. So options is exclusively what I do in TradFi. I was doing exclusively Uniswap V3 LPing, and again, before Panoptic, and I'll probably do only that when I with my DeFi interactions, selling options, buying options on Panoptic as well.
And crossing over into the world of DeFi, then was it? I guess what kind of challenges or hurdles did you find yourself coming across, or was it actually pretty easy?
It was okay, I guess. You have to write the smart contracts, you have to create the interface. It's good to have an idea, and then in academia you just publish papers, and then you don't care. Now it's actually delivering through that. So just the transition and the product development was not a hurdle, but it was kind of a step up from what we used to. But that was fine. The smart contracts, I'm still writing them. I guess I'm very involved, but in the day to day. But yeah, making it secure, knowing all the vulnerabilities we know about, even like hacks and stuff. So it's very, very important to do it right. Audits and kind of these type of like review are extremely important. And if you design in a way that you think is secure, you have to back check 3 times, 4 times just to be sure it's actually secure. Right. That was like the most the long-winded progress of like, let's do this and this. And now it's like asymptotically going towards completion, but it's always a bit more to do because you have to look at all the possible angles. So anyways, that was maybe the most the thing I didn't anticipate being as difficult and kind of involved in terms of getting it across the finish line.
And how big is the Panoptic team?
So we are 7 people now. So we have devs mostly. We're building And then Rosalie, which is the latest hire. She's very well connected in the Web3 space, and then she got us and stuff with Ash. But yes, she's out from Austin too. But yes, she's also like helping us do it. Now we're done bidding, we're doing BD, outreach, marketing, making sure people kind of know about Panoptic, but also know how to use it. It's not just trade options and then you're on your own, but rather can we teach you how to trade options, how to manage a position that goes against you. It's actually very, very mechanistic if you want. It's not just you look at a chart and you know when to buy or sell. It's actually there's metrics that you need to kind of internalize before you say, now I sell, now I buy. And that's kind of something that we're also working towards too.
Got it. And earlier you said that you run your team sort of like you ran your research lab. Tell us a little bit more about like what's the dynamic of your team. I mean, it sounds like it's working, so it must be effective. But yeah, what does that mean to you?
Yeah, I mean, maybe I was also the outlier, but as a professor, I was spending time in the lab, doing my own experiments, fixing the equipment that was broken, calibrating like whatever optical equipment. So I was still pretty involved, and I liked it. My own PhD supervisor was the same way in his 60s, but then he was like running around in the lab doing experiments. So I feel like we connected that way, and that's what I do. So being hands-on. Again, the longer you are, and then the bigger the team, of course, you have to manage. You cannot do it all, but at this size, at what we have to do, I'm still coding. I'm still doing research pieces. I'm still on Twitter active, kind of working on the marketing side. I'd like to have some involvement and then kind of be able to talk to my team, get feedback. We're all talking at an equal level. Is very, very kind of, again, you speak to your students in the lab or your postdocs, they know more than you. So you have to be humble in that way. So that's the same way I feel with my team as well.
And is your team in one place or are you distributed?
It's distributed. Yeah, most of us are remote.
Yeah, so like you mentioned earlier that like, hey, your goal is to try and make it ELI 5. Like, someone should be able to understand in a very basic level what an option is and how to do this, right? So, this is a perfect chance for you to just use the language of words to get us some smooth brainers to tell us like how and why would we use this in a very basic way. Give us an example and then like let's drive it home, and then we can hit on the features of like the Oracle fee pricing, how it leverages the LPs in like the current market, right? Like ETH is at like 3,700. Like what do we do? Like what is the play here? Give me some DYOR NFA, of course, but like can we leverage Panoptic in this market?
So to recap, we're going to go LE5 to alpha. And remember, Guillaume, I said there was going to be a test, so the test starts now.
Okay. So maybe like many things, an image is worth 1,000 words. And this is the starting point. Our interface is actually quite unlike any other options interface or trading interface you may see, even Robinhood or your brokerage firm. It's actually an interface for nerds by nerds. And then if you're not a nerd, you understand it because it's like an Excel spreadsheet. You have rows and rows of data. It's collapsible. So you click on it, but it expands like 25 different rows. It's actually turbo UX. And unless you've done this for 10 years, it's a pretty steep learning curve just to get to know, okay, what the hell am I looking at? Our interface abstracts everything away from this. So just the reinvention of options is not just at the mechanistic level, how everything is settled, but also how we present it to our users. So the best way I can think of is to describe options is that you are buying into a mathematical formula. So most of the time you buy a stock, it's straight line. It goes up by $1, you make $1, goes down, you lose. Very, very straightforward. The more you own, the more you make, but it's very linear. There's no other way to describe this. You buy a linear payoff. If you are buying an option or selling an option, then the payoff is a bit different. And it could curve to above a certain price. It could stabilize, limit your losses on the way down. The stock or the token could go to zero and you don't lose all of your money. So it's just a different way of investing. You don't trade the stock, you trade this formula associated with the price of stock. The derivative is part of any derivative that the value derives from that. So on our interface, we show this payoff the forefront of what you are pursuing into. You see a payoff, you see, oh, it curves here, it curves there. You can actually interact with the interface, move the parameters around to create the exact payoff you want. And it could be, as I said, range bound. If it's between those two prices, you know you're going to make money. If it's outside, you make money. You have a lot of freedom, and it's up to the users. It's actually very hard to say, you trade this and you'll be successful. It's time dependent. It's how you feel about the market, but then it's actually very, very hard to be generalized. So at the end of the day, you're buying into a mathematical formula is visually easy to see, hard to describe in words. If you see the formula, it's actually also hard to understand. It's actually a very, very complex formula. But yeah, at the end of the day, on our interface, we put the payoff at the forefront, and this is what you participate into.
I want to dig into that for a second. So I come from I started my career in UX, and so I've spent a lot of time on the user experience and user interface side. Whose insight on your team, was it your idea to abstract away the complexity into this simple interface?
Yeah, so I do trade options myself, and I use maybe a shout out. It's a Tasty Trade is the platform I use. They have some of this. They are innovative, making it easier for the retail users to use to trade options. And they had a similar interface. We just took it to a different level. But yes, and actually, as I mentioned, initially the core of the idea is that I was creating those charts myself. I was plotting it and then looking at what it looked like, and visually, this is how I was thinking about Uniswap position. So it was natural to also transfer this. And if you want to do options chain, if you want to do the same Excel spreadsheet worth of data, it's actually not even working with perpetual options. You don't have expiries. You don't have like set prices. So even trying to use the conventional UX would not work. So we had to change it, but then it was natural to use that payout as the centerpiece of that UX.
So let's maybe keep going with some of these differentiators then. So you've got this simplicity in the interface that visualizes the complexity of this formula. Talk to us a little bit about the lack of oracles and why that's an advantage, because I think that's lost on a lot of people, and I think it's actually really important.
Yeah, and the long story short of that is that if you trade on Uniswap, people understand naturally you can list any tokens, you can trade them very easily. Teams that launch tokens, they don't have to go through the process of Binance or Coinbase. They can do it in a single block, and you trade, and price discovery happens there. And this is on its own where the real price is. If there's only one place to trade Pepe, you trust that is the correct price. If you want to trade ETH and BTC, maybe the bulk of the volume comes from centralized exchanges. So you have to now say, okay, which one is the real price? The one that I have on this layer 2 or illiquid pool, or the one that is traded hundreds of millions of dollars per day. So the oracle-free nature manifests itself most strikingly in the long tail assets. You don't need to wait for Chainlink to aggregate prices from different venues to say the price of Pepe is this. You just look at what the Uniswap price is. And as I mentioned, we're integrated into Uniswap, so it's not just reading the price off of it, but if you provide liquidity, you are affecting this price. If the price moves, it affects the composition of your LP position. So it's very integrated. And if you want to manipulate the price, you trade against your old position if you want. And that's liquidity you put. So it's a slightly different approach, but because trading and options or the instrument you're creating are at the same place, it's actually like a lot more efficient in a way that you can use the price of Uniswap for those options. But yeah, any pool that exists in Uniswap, we can create an options market on top. And on day one, we can, and tapping into the meme coin these days could be very attractive. So again, you could trade call options on those meme coins. So puts, if you think the price is going to go down, which a lot of time it does, then you can do it, I guess, in a way that is permissionless and doesn't rely on, again, external feeds.
So so you talk about this Oracle free options, like meme coins, for example, right? These are like markets that have they have liquidity depth problems, right? Obviously liquidity depth problems, like the ceilings and floors, there is some holdover risk in terms of how then options are priced in that matter, right? Because in this case, you're letting the market dynamics define theoretically how to price that option, and along with the implied volatility and everything that's associated with it. How do you think about minimizing that risk? Sorry, I went smooth brainer to Liverpool brainer. I'll go back to being stupid in a second here. Don't worry.
No, that's right. I think the maybe if you or anyone has provided liquidity in Uniswap V3, if you do it in the big pairs, it's like very slow moving. If you do it day one of any token launch, doesn't even need to be a meme coin, but initially, lots of people want to trade. Some people are risk averse and don't want to put their capital there. So that's where you have some liquidity problems, but the demand for trading is there. So as an LP, and maybe the ETH ribbon pool was my first foray into that world where I made like 50% in fees in 24 hours, but I lost 50% of my capital because of the price move. But you could see the implied volatility is what dictates your returns. This is through the roof. And the exposure, people call it impermanent loss. This is given by the price moves, but you can balance these two. In my case, I did not end up losing money, but you can actually get a super wild price action that reflects in more returns for you as an LP. And it's a highly volatile pool. Like, for instance, Tesla is maybe 60% IV or implied volatility. These pools were 1,000% for the first 24 hours. So the returns you get are juicy, the risks are high, but it all equilibrates. So this is the Uniswap V3 world. This is how you trust that the returns you get are accurate because it's real funds that are generating, real trading to generates this. The fees you collect is your options premium. So you would sell an option on GameStop, and the IV could move between now and tomorrow, and you can lose money without even doing anything. In Uniswap, because it's trading fees that are generating your revenue, you know that it's real accurate because it's actually what is generated. So that is what you can do in Uni V3. In Panoptic, we hope to tap into similar markets with new token launches, but now you can buy maybe protective puts. You can actually limit your losses. You can be delta neutral. You can make money if the token goes up, if it goes down. You still get this juicy premium. But the way I was exposed on the downside with Ribbon, I could have created a different strategy that meant I win if the price goes down, I make the fees as well, double win. So you could actually be more strategic in that market making aspect of providing liquidity during these kind of initial token launches.
So theoretically, a user could go like commit to a liquidity pool in V3, right? Take advantage of the concentrated liquidity that is basically provided in this, this new breakthrough, and then head over to Panoptic, be a liquidity provider there, earn the fees there, and then hedge like whatever the price action is on their actual pool to like basically cater for the impermanent loss that could basically occur potentially in their commitments to Uni. Like this, I guess, is a strategy that can be easily done and deployed.
Yeah, you could be an LP in Uniswap and you could hedge it with options. You could go on Deribit, but it doesn't have the shitcoin you're trading. Now you can do it on Panoptic. But even more than that, you can even bypass the Uniswap part and provide liquidity on Panoptic. Sell your option there right away from the beginning. And you can now hedge it. Put spread, for instance, limit your risks, balance how much you can lose. You can do it all in a single trade and get more capital efficiency that way as well.
Okay, so that's pretty
cool.
Do you mind if I ask another question about like, when you're talking about the Oracle free options aspect there is, and like you're leveraging Uniswap V3, V4 is like around the corner. There's a lot of interesting efficiencies that come along there itself. Like just how you guys are talking about the webhooks. I'm just wondering if you guys are using the hooks to like basically make it way more capital efficient than it is, and how this data can be fetched and like how it can be deployed. Is that like the obvious thing that everyone is talking about? I know Uniswap is doing like an incubator around webhooks itself. So yeah, I'm curious to see if you guys are part of that. Like, come up with crazy ideas.
Exactly. So we are building on top of Uniswap V3. It took us a couple of years to get there, but we got there. Uni V4 is a new iteration on this. So the hooks is just more like granular control about how an AMM works. You still get the flow from Uniswap, whether the interface and it gets routed, but as a developer, we can now say, now, if you swap, you can do some operations before the swap, after the swap, manage liquidity in a way, same thing with providing and removing. So currently we're launching on V3. The same set of smart contracts we've adapted already, but they work on V4 as well. So we don't do the hooks yet, but we can build on other people's hooks. And if you create a hook that does dollar cost averaging or the time weighted average purchase, you can create an options market on that hook. So that is us kind of offering it in a way that is agnostic, and anyone that wants to create a new AMM type market, we can create an option on top as well. But yes, the future of maybe Panoptic V2 is to be a lot more integrated, get the liquidity source directly from those folks into our smart contracts, a lot more capital efficient. So the lending component to Panoptic as well. So you can borrow funds to multiply your returns. So instead of putting your own liquidity, you can say, I'm going to borrow twice as much, get twice as much fees, maybe twice as much risk, but at least you can actually manage it and tap into slightly higher returns. This is done in V3. In V4, it's also going to be, again, more efficient, better integrated, and kind of also, something that we are working on as well. But yeah, the timeline for V4 is Q3. I think that's the latest. So we're prepared for launching Panoptic on V4. But yes, its second iteration will be deeply integrated into the hooks and have it like be part of that ecosystem.
Okay. I'm sorry. I have another question. I have a never-ending set of questions.
Like a good student in some of my classes. You used to sit in the front, I'm sure, in college.
To be honest, I don't know if I made it to half my classes. To be honest, I was either way too drunk or I didn't know where my schedule was. But the classes that I loved, I showed up and I was
This is what
in the front of the class,
of course.
For sure.
Yes,
exactly. I jumped the gun a little bit on V4, but on V3, one of the cool things is that you have this streaming model. I was hoping that you can basically illustrate this in a very simple way to people, and explain that. Like, just break down the streaming model in as simply as you can, because it is so fucking cool. Like, once people get it.
Yeah. So let's start with traditional finance. Maybe GameStop is something that people may have traded themselves or they heard about. The key point is that people were buying weekly options. So Reddit said, let's write the one that expires on Friday, $1,000 strike. So if it goes above 1,000, we'll make money. Gamma squeeze means we make more money. Week after week, they had to buy this new option. It expired, what is called out of the money, so it never reached $1,000. So every week you have to buy it again. If you were to trade it, maybe people to do it, but GameStop calls, you would be buying them every week and expiring out of the money. So you lose that money every week. So that's what degens do with GameStop, but then any type of funds that want to hedge risk, they buy put options or callers, but they have to roll them forward. Every time it expires, you redeploy, spend capital, and do it every month, every 3 months, every day. You have to do it use now. So it's always a recurring purchase if you are buying. The same way that perps improved on the futures market by shrinking the expiry. In futures, you have quarterly expiries. Now they do it every hour. Next, they did it, but very, very frequently, every day, every hour. So we do the same thing with options. Instead of rolling forward every week, roll forward every block. So every 12 seconds, it's automatically, I guess, but that's the mental model. You pay 12 seconds worth of optionality forever. And if the price is close to your strike, you pay a bit more for that block. If it's far away, you pay nothing. So the cost accumulates over time. And GameStop was very expensive and people lost money buying those options. In theory, if you were to do the same trade in Panoptic, you would not pay anything at all because the price never went anywhere near close that $1,000 strike. So that is, Uniswap does all of this computation for us, so we don't have to do anything. But yes, if you are buying an option, if it's close to being in the money, obviously close to your strike, you pay a bit more, but you pay a tiny fraction of a percent every block. And that is a new way of doing options. The price could change wildly from day to day. It's like a funding rate in perps. You don't know what the funding rate is going to be in a week, but you can hedge or exit at any time. Same way that if you buy these options every month, you don't know what's going to be 6 months from now. Maybe it's going to be a crash. It's going to be more expensive, but you actually do this consistently. So the price per block is known. The price for weekly option is known, but it's how long you keep this trade on that determines how your ultimate payoff will be. So that's for those that come in with the options world, a good way to explain this. For those that come in with DeFi is that you provide liquidity, the fees you collect accumulate at every block. And the longer you're in range, the more fees you make. So that's, you want to be in range, you want to be right in terms of where it's sitting. But if you buy an option in Panoptic, you reimburse those fees. So we still do the calculation, how much fees are collected. But now as a buyer, you say, now, this position would have earned 0.1 ETH and $400. Now this is the cost of that option, and that increases over time as well. So two ways, hopefully, that make sense from the options folks, DeFi folks, but it's very, very innovative, a bit unknown, but similar to a perp funding rate. If you don't like the rate today, you can exit at any time.
Yeah, and I mean, like, this is so cool, right? Because you're trading on this temporality, right? You can basically, the shortest amount of time that you could trade an option for is 12.16 seconds, which is crazy to think about, right? Because you're only limited by the chain infrastructure of the block time being 12.16 seconds. So theoretically, if Ethereum tomorrow just said, like, guys, we're doing 2-second block times, right? This effectively would mean that you could trade on a basic level of 2 seconds. You could get in and get out in 2 seconds. You could, and then, or keep it on forever, which is kind of crazy to think about, right? Because as Guillaume said, like, for us dum-dums, right, out there, including me, that basically means like you're not paying all these bloated fees for some middleman or this middle tier group of people to keep this like instrument in play, which is wild to think about, it's pretty cool once you wrap your head around it.
And I think those market makers in TradFi, they overcompensate for the risk as well. They never know, so you buy a bit more, but if you sell, you also make a bit more money. But at the end of the day, what you're describing, the time increment, you could do the same trade with the option at 3:59 p.m. on a Friday, right before it expires. You can say, okay, I'm going to make it big, sell it right before it expires. But now it's 24/7, ongoing, it expires every time. And the 12-second timeline, you can do this now in Uniswap. It's called just-in-time liquidity. You see a huge trade, you put liquidity there, absorb some of the fees. This is selling an option for, as you say, 12 seconds. If you're the only one selling, you know what the outcome is going to be. If other people see that coming, they could also mess with your P&L and make you lose a bit more. So we somewhat like this just-in-time liquidity as well, because it's just a different trade, very, very short time scale. Some people want to trade monthly or even yearly options, but it's just part of the equation. It's actually pretty organic to have this short-term, medium-term, long-term type of options trades.
Yeah, and I mean, like, your architecture is defined that you're leveraging Uniswap to effectively take on that, right? They're basically your Oracle provider because you're getting the market dynamics to do it. They're also your LP providers in a way to basically fund these options. But like, we touched upon this idea of being an LP natively on Panoptic. I was hoping that you could get into that a little bit more, because one of the things is, like, many people who are, familiar with Uniswap, they're like, I can swap, so I can be a user, or I can be an LP provider. In Panoptic, what is a user role, and like, what is a Panoptic liquidity provider specifically?
Yeah. So the active trader that we call in Panoptic is those that deploy liquidity, deposit either in Uniswap or Panoptic, but it's like putting you at risk. You put your capital there, you earn fees, you get paid for that. That's kind of one set of users. The buyers are more speculative. They think they have an edge. They think it's going to be mispriced, or the price of ETH is bound to pump, so I'm going to buy those calls. They are speculating on the price. By doing so, they increase the revenues for those sellers and active traders. So these two is very much like you have in Uniswap. It's just that now you have a way to buy the other side, two-sided market on the trading side, which is very, very active. We have a third role, if you want, in the Panoptic ecosystem, is when you want to trade, you want to sell or buy an option, you can actually borrow funds from these Panoptic LPs or passive liquidity providers. I used to do this thing on Order Finance or Compound or Aave. You borrow some tokens, you get more return because it's like multiplying your capital. Sometimes I would short or borrow the shitcoin I didn't want to hold, so that helped hedge the risk. But you always need some type of leverage or some type of way to multiply your capital efficiency. So in the Panoptic ecosystem, we've created almost like a lending protocol within that options protocol where you can come in, and then maybe a lot of your audience may see that this is their story as well. You tried Uniswap V2, LP a bunch of YAM tokens, were successful, tried it out in Uni V3, was too complex, too much time consuming, so you didn't want to carry through. But now you can come back to Panoptic and be this passive liquidity provider, which is lending your funds, your funds or coins to traders, and they pay you an interest rate. They pay you a commission fee on that trade. So it's a different revenue stream, but you can actually get a higher return than what you get, I guess, at liquid staking token. Maybe like more than 4%, less than 20-30%, because these traders also want to make that much money. So it's bridging the gap between passive risk-free interest rates, which is the staking yields, and extremely active and performance trading, which is maybe 50%. You can have a spectrum of returns as well. So the lending component is actually crucial to make the whole system work. You need some leverage. You need to be able to say, you could get liquidated, of course, but you can actually be more capital efficient, which is what happens in TradFi as well, where you don't have to back everything that you are trading with all the collateral. You can use a fraction of it and still be kind of tapping to revenues themselves. So yeah, most users that were passive nature, type of buy and hold or let something sit and grow, they can be Panoptic LPs or passive liquidity providers in Panoptic. And we try to brand this as the active passive LP separation. So being an LP is very difficult. The active ones actually are making a lot of money, regardless of what people say. The passive ones are kind of less left in the dust. We bring this back. So active will be trading, tapping into capital efficiency to multiply their yields. Passive will be passive, lending out their tokens, getting this interest rate, perhaps higher than compounded AVE, because it's traders that do it, so they can pay 100% APY if they want, because they make 200% out of it.
And I'm going to throw in a dumb question too. So how is the lending rate set?
It's by supply and demand.
Okay.
The utilization you get in a protocol like Aave and Compound is a bit opinionated. So you know exactly by utilization and the kink, and that's one way.
Yep.
For us, it's every time so it's not a streaming interest rate that we pay. And for several reasons, we decided to do a upfront cost. You pay a 10 basis point fee on borrowing. This amounts to about 10 days worth of interest rate at 20% APY. So you buy upfront, you can hold it for 100 days. It's only going to give you 10 days worth of interest rate. Or if you trade for 1 day or 1 hour, you pay more. So that helps equilibrate, but it's a upfront cost. You pay it once, and options typically you need to adjust, roll. 10 days is actually a good timeline for most users that aren't in front of their computer. So the more trading activity there is, if people want to trade actively 25 times a day, they can pay quite a bit APY from their own activity.
Makes sense. And so you're talking about these two user types, the active, the passive LP, and you've got, a product essentially for both of those types of activities, which to me sounds like you're trying to make, this kind of financial instrument, this kind of trading activity much more accessible to people. And I'm just curious how this connects to the bigger vision for Panoptic. Like, what do you see down the line for Panoptic? What's the big mission?
I mean, I'm regardless of my background, I wasn't a options trader at a bank or high performance. I come from retail, and a lot of what I had to do is learn either through trial and error or finding ways to be like learning through other people's mistake. But you can be empowered to learn as a retail user and even be more profitable than a bank that has to trade millions of dollars every day. You can be 10K, 20K and be still successful. So the first, and this is by necessity as well, we want to see retail traders, DeFi native, degens, investors, whoever is on chain now, which is 95% of the users, are these smaller traders that can trade, and we want to onboard them. We want to create content to show them how it's done, help them with their trading. We may have like office hours type of thing saying, hey, my trade is going against me. What should I do, professor? And then we can work through it. So all of this is creating a better environment for retail to trade options. Because if you trade options in TradFi, you need to have quite a bit of money in your account. You need to almost take a class. You have to swear you've been doing this for 5 years. Otherwise, they won't allow you to trade naked options. And maybe people can jump through these hoops. But if they see you have $5,000 in your account, they will likely reject. Here, you can trade small size, big size. You can be leveraged quite highly, or you can be conservative. Everyone can actually find their what they want in a protocol like Panoptic. So that is retail. This is the first phase. If you want, can we launch? We'll go on all layer twos. We main it as well, but layer twos means that you can not be worried about the gas, especially now with the after the Vancouver pennies per trade. So you don't have to worry even about the fees. It's just how well can you trade. Could be with $50, could be $50,000. You can actually do the same trades if you want on layer twos. That's very.
Yeah, and I really like the idea about what you're doing to onboard folks. I had a chance to poke around on your site a little bit, and there's a great options trading 101 section. Definitely can tell your background in education, because you go really in depth from like all the way from the start, from I've never done this before to even the detailed formulas and things. So I thought that was pretty cool. I also saw your beta has some pretty fun practice coins to use in there as well. So I had a chance to poke around in that as well.
I mean, so education, the docs is something that, and even investors, anyone, even if you're an options trader, perpetual options, the Uniswap link is actually very hard to grok. So we do want to emphasize that, again, the docs are a good place to start. We want to be active in the community, teaching people like how to trade, but also like showing them the best practices, if you want, of an options trader. And yes, we're currently in beta. We're in beta since December. And then we decided we went on base, even AVAX, we went on Optimism, Polygon. So we did it with real coins. We had the Matic USDC pair. Actually, I've met with the winner of that competition at ETH Denver. He was really proud of his trading. He made 35% in 2 weeks. Again, the price went up. He was right directionally. That worked for him. So that is kind of how people can get exposed to it. But yes, we also have a holiday themed competition that went on for a little bit. It was the December Nutcracker pair. So 2 rare 620 tokens we made out of thin air. We don't know how to have people trade USDC or ETH. So there's a faucet, you can claim it. The tickers are these nuts, December Nutcracker. So you can actually trade for pennies now. It's still live on base. And it turned out, so it's a weird market, right? It's only the Panoptic liquidity there, not a lot of trading. So it was a weird place to trade, but it's going to match quite directly what we think is going to happen in the future as well, where most liquidity will come in from these options traders. And because there was a faucet, we didn't expect this, but some people tried to game the system. So some people created like hundreds of accounts, claimed these nuts, and then now could be a whale. They could trade, swap, get their position in the money already. So they could tally up quite a big profit P&L on the leaderboard, but then their trading account lost most of it, but it got presses them. So we realized this is like likely what people will do in on mainnet as well. You'll have whales, they'll try to game the system. So we were awarding prizes. We initially thought the top 3 will get some prize. Now we said the nice traders, those that played by the rules, they got an NFT. This was a what was it?
I think a little pudgy is what I saw.
Little pudgy. Yeah, exactly. Top prize, little pudgy.
Oh, nice.
You played by the rules. Very, very cute. And then the best one actually did some heavy trading, like dozens of positions. We had a naughty list. So those that were sibling, attacking the system, they had a piece of coal, I guess, beside their name. They got a milady. Again, we bought it in October. It was a bit cheaper. The winner was...
You obviously know your audience well.
I know. And then the subversive type got the milady. They auto dumped them, which is again part of the rationale as well. And then we had also an effort that we awarded to the single position that obtained the most premium. So that's just someone that happened to be at the right place, right time. Lots of trading activity from these attackers, bots, whatever. But at the end of the day, they made big money the same way that I made money on the ETH ribbon pool without doing much. They got an MFR as well. But this was successful. We had almost 500 people participating in all capacity. Nice, naughty, very, very cool. Wow. But yeah, you can trade now to thesenuts.panoptic.xyz and try it out on base. Pennies per trade. You can buy calls and puts on these nuts. But that's
fantastic.
Maybe we'll do it a holiday tradition. Trade the December Nutcracker tokens.
Awesome. So we kicked off this conversation. Oh, go ahead. I'm sorry.
No, that's right. We wanted it to be fun, but it is all good spirit.
As it always is for DGens.
Yes.
We kicked off talking about innovation and how that led you down this path. And you've you've been on this journey now with Panoptic for a while, and it sounds like you're just entering, a new chapter of things with adoption and the usage that you just mentioned. What advice would you put out there for aspiring entrepreneurs who are thinking or trying to innovate in the blockchain space? What tips, best practices, lessons learned? What can you share?
Yeah, and maybe the best advice I could give is try to build something you'll be the first user, or maybe the only user of. I built this out of necessity almost. I wanted to trade options. I found this quirk link between Uniswap and options, and I'll be trading this. I'll be happy to see the products there. I'll be making improvement recommendations to my team as well. I want to be the main user. And now you know your market the best way possible because you're the market. If you try to do something that looks nice in theory, but you have no idea how you would personally use it or how you would actually benefit from it, then it's a much taller ordeal than if you say, this is what I want because I want to do this and this, and that's how my life can be easier, happier, better, because I know what me as a user needs, and then everything else. Again, hopefully it's not too tailored to my own needs. These nuts maybe is an indication of that, but at the end of the day, this is kind of what's driving me as well. Like, how can I want to do this? I don't have the interest of whales and those like large funds. I could make it so that retail users are in the benefit as well. So then that's also maybe as a product designer, creator, how could you make your own life easier? That means that now people will see the same advantage as you do.
Yeah, that's great. And be user zero, basically.
Exactly.
Constant feedback on tap.
The first user and the last user. This is what I want to be as well.
DeFi is obviously super fast moving. In fact, I think it's just continuing to accelerate. How do you personally manage like the onslaught of information? How do you stay up on all the developments, or what do you pay attention to? How do you keep focused?
Yeah. No, it's hard. I'm on crypto Twitter, so every morning I get the latest of what happened. And whatever. Yeah. Some days it's like the slurp or whatever it was. It's always funny, but yeah, you cannot keep up. I have pretty intense day job now creating this product. So I get some snippets of what's happening. So I keep focusing on what I think it matters, which is shipping. But yes, your users, I'm sure, are much better equipped to adapt, to see what the trends are. You can make money out of it. This is like the crazy thing. In the beginning of like .com or mobile, all of these waves, it was a product that made you feel better. You could play Angry Birds and it was fun, but you could not make money being the best one. So here you can be the best one at this super weird game of points restaking, Pendle Finance type of like super weird instrument. You benefit, and that is the ultimate driver. All the edge cases, someone will think 10 steps ahead of you and do it. So again, I don't want to be as involved as some of maybe the degens out there, but yeah, the incentive now is making it 100 times faster because you are in the PvP environment. Some people do this, you do something else. Very, very intense. So yeah, I feel left out sometimes, but yeah, I guess with Panoptic, we do have to listen to our users, but yeah, we'll probably also learn from them quite a bit as we launch and kind of listen to them as well.
No, that's great. So I'm going to close this out with one last question. And thanks again for such a great conversation and overview of Panoptic. I'm super excited to jump in and try this. Can you share a personal habit or a philosophy that's helped you have success both in DeFi and academia?
I think I have two kids, I guess, 3-year-old and also season now 8 months. But when the 3-year-old was young, this was again 2021. I go on walk him around, just take some time off, look at the nature, make sure that your brain works without being kind of prompted to. And this is where most of the ideas come from, actually. I again, crazy life these days, I don't work as much, but whenever I have time, could be a drive, could be a walk, could be something just to unwind without having to purposely do something, look at your phone, do something else. And that frees up your mind. You get, at the end of that walk, typically I have like 25 ideas, and like most of them are bad, but at least the brain is working in a way that is more free floating. And that's basically the best way, I think, to both unwind, but also be creative in what you do.
Amazing. Guillaume, thanks so much for hanging out with us. It's been a great conversation. Where can people go to find out more about Panoptic, to learn, to play, and to keep up with you?
Yeah, sure. So the website is panoptic.xyz. You can go on app.panoptic.xyz or these nuts. We have also big presence on Twitter. Myself is Will_Lambert. Maybe you'll link it, and same thing with our Panoptic_XYZ account. We try to create content. We try to make maybe the DeFi world a better place by creating pieces that are interesting, educating. Might be tough to read those in a row, but every once in a while, if something pop up, it's from us. It might be a bit more on the like, what's Delta? What is the how can you understand an option? So we try to also create content, and we'll ramp it up as we launch as well to kind of make sure that people have a reference frame. It's not just trade options and do what your neighbor is doing, but rather understand options. So that's where, again, social media. Maybe we'll have a Twitch presence or some way to interact more closely with our users. I'm a big fan of Tasty Trade, the trading platform, but they also have some content that is produced daily. They for some weird reason, they spend 8 hours a day chatting, creating research content, interacting with their users in the TradFi world. I like this model a lot. I learned actually quite a bit from it. We may want to do something similar as well. So yeah, keep an eye open. Unfortunately, Discord is there. I'm a millennial, I guess, so I don't get Discord, unfortunately, but the younger folks in our team do. But yeah, maybe Twitter, and then kind of the online presence will be more kind of on these slightly different platforms.
Amazing. Thanks so much for hanging out.
Of course. Thanks for inviting me.
Awesome.
Thanks,
Guillaume.
Guillaume.